And the battle continues. Welcome back to We Talk Money, guys. This week we've got more news and updates on the battle between the SEC and the crypto economy. Also, we've got a lot of macro data. We've got some stonks to look at. We've got some lawsuits to look at. We've got some charts to look at. A lot of stuff to look at.
It's a busy week out there.
Definitely. And let's just start by talking about the big elephant in the room. Does a Bitcoin ETF change everything? You know, yesterday I was tweeting a lot and did a quick video on YouTube and Twitter just talking about how the SEC looks kind of silly right now after their loss. I'm going to call it a loss, even though it's not a victory for Grayscale and Bitcoin yet, but it is a step in the right direction where SEC lost their lawsuit against Grayscale trying to prevent a Bitcoin spot ETF from happening in the US. I've put my take out there, but I wanted to hear you guys' take on, is this bullish for Bitcoin? Does this seem like a clear roadmap to a spot ETF, or is the SEC going to find another way to weasel their way back in and keep this from happening?
I personally think it's a pretty big deal. I think it's a big deal because, one, you have the optics of the SEC losing in court, and that's got to be a blow for them. And it's also a win because GBTC is a very large vehicle when it comes to Bitcoin ownership. And so if you have that vehicle potentially becoming an ETF on the horizon, it's a big deal. They already own a significant amount of Bitcoin, over $10 billion worth of Bitcoin. But imagine this thing gets converted into an ETF and doesn't have this massive discount to the value of its holdings that it's been trading at. People become more confident in buying it. People, far and wide in their IRAs and their 401ks are allowed to buy it. And that becomes, I think, a very big deal and potentially one of the largest owners of Bitcoin going forward in an even more massive way. So I think it's a pretty big deal. And it's great to see because I think the SEC was being completely ridiculous in this suit and completely ridiculous in the whole process of how they're approving or not approving Bitcoin spot ETFs.
It's almost as if they're biased and don't want Bitcoin to succeed in the US. I mean, I think Gary Gensler has literally said that, like, we don't need Bitcoin. It's like, hey, buddy, keep your opinions to yourself and do your job and protect us from real scams like you failed to do with FTX. And now, I mean, they're still suing pretty much everybody and anything in crypto. And we'll talk about some new stuff that happened this week. But for anybody that doesn't know, like, what the implications or the expectation of what could happen with a Bitcoin ETF, this is really, I think, why people get so excited, is because of what happened with gold in the early 2000s, right? So throughout the 80s and 90s, gold's price was basically flat, above and below like $400 an ounce. And then in the early 2000s, we had gold ETFs come out, and that pushed the price up in part because of ETFs, but it was available to a much broader audience or investor base. And right now, gold is sitting up around $2,000 an ounce. And so I think that's kind of the expectation or the idea of what's possible. So out of the investing capital that's available out there, I don't know how many trillions it really is, but how much capital do you think would actually flow into a Bitcoin ETF, say within the first year? Is it like 10 basis points of the average portfolio? Is it 1%? Is it 10%? Is it more? Do you guys have an opinion on that?
I think that one thing we need to remember is we have investment advisors that are going to be very impressionable on invest. We have the BlackRocks of the world and the Vanguards of the world, right? They're going to be very impressionable on investment advisors that manage client money. And they, I think, are going to essentially make this legit. They're going to make Bitcoin, quote unquote, legit for a lot of investors and a lot of investment advisors if this happens. It means it's not going away. So I think that a lot of people are going to want to allocate to this. And a lot of people are going to have advisors that allocate to it with their people not even knowing, with their clients not even knowing that they're allocating to it. Because let's get it straight here. most people don't know what the hell is going on in their portfolios that have their money being managed. They don't freaking know.
Very true.
And I think that once, the BlackRocks of the world get a hold of the advisors and say, hey, there's this new, because they teach, they educate advisors on all this stuff. There's this new asset class that you can add to a portfolio. Here's what it does. Here's the risk adjusted returns. Here's how it can improve returns with a small percentage allocation.
Yep.
These are all things that these money managers are going to learn about, and they're going to allocate to it. And so I do think this is going to be very impactful, even though buying Bitcoin via Coinbase is not hard, so to speak. You got to remember, a lot of people are really lazy. And if it means that they're going to have to open up another brokerage account at Coinbase in addition to their Fidelity account, they're not going to do it. So I think this is going to capture a lot of the people that kind of want an allocation and are intrigued and interested, but are too lazy to go deal with self-custody. And I think that's a huge buttload of people.
That's literally the late majority, right? In the adoption curve, we were super early. Now we've had I think the second or third wave in crypto, however you look at it, over 2021 to 2022, that was still, I think, kind of like the early majority. And I do think, like you said, Nick, BlackRock and whoever gets the ETF and the largest asset holders and financial advisors will bring that late majority. And that's where I think we do hit, true market saturation. So what are you hearing in the financial planner, investment advisor circles around this? Has it changed over the past couple of years? Are people on average in that world bullish, bearish, apathetic? What are you hearing and seeing out there?
On average, a lot of people are still hesitant. A lot of people don't see the value proposition, but at the same time, I'm also seeing way more adoption. Look, the proof is in the pudding when you look at how a small allocation can improve a portfolio. Like, the data's there, the numbers have been run. And so advisors can't ignore that if they have a fiduciary duty to their clients, right? They can't ignore that. So I do think that people are coming around. It's going to be a slow process, but bringing on a corporation like BlackRock that has a lot of people respect BlackRock. That's going to change the game, I think, for a lot of advisors as they put education out there for them.
Makes sense. So in the spirit of being objective and balanced, I don't think that this news is necessarily just a clear roadmap for an ETF, right? The SEC, I think, is going to try to find another way to battle against this, or they could potentially use it as a way to kind of gracefully back out from the battle. I don't know if that'll happen. Trav, do you have an opinion?
I think you're right. My opinion would be that, the SEC is not going to give up the fight that easily. And I think they're going to do everything they can to impede the process. Now, it's clear with BlackRock and Fidelity lining up with ETFs and a number of other institutions that there are a lot of conversations happening behind the scenes, and that there is a push by very, very powerful and important institutions, financial institutions, that will probably make this happen at some point. So for me, it's really a question of timing. But I do think you're right. I do think in the near term, it doesn't necessarily mean ETFs get approved next week. But I do think that it's a significant blow to the SEC. And I think ultimately, with the other institutions aligning with Grayscale, that this is going to happen. It's just a question of when.
Yeah, I agree with you. So
what's interesting about this is the futures ETFs are almost doing more harm than good, right? Like, because there's the rolling of the contracts that can cause significant negative returns for the consumer. So isn't a Bitcoin ETF like a spot Bitcoin ETF essentially better for the consumer versus the futures? That's kind of something that I've thought about.
Yeah, I think that there's certainly an argument to be made there, but I think just the broader idea that more investors can participate, like we've been talking about, and I said on a Twitter space this morning, that's why I think it's such a big deal, because it unlocks so much more of the retirement account market. I mean, you have something like 35 or 40 trillion of retirement account assets out there in the U.S., and we're still, I think, right around or just under $1 trillion of market cap total for crypto right now. So there's a lot of share to be gained by crypto as a percentage of the assets out there. And so, this to me is something that just opens up the market to many more investors, particularly the later ones, like you said, Chris. And, futures are products that institutions and, very sophisticated traders will use, but they're typically going to be, not utilized by your average everyday person out there. So that's why I think this will dwarf the size of the futures market. And with the ETF mechanisms, that means that, again, you don't have to worry about trading down to such a significant discount. That's been a real knock on GBTC. It's also why we bought GBTC last November. And, I've got the tweet thread pinned to my Twitter account. Just because I want people to see, like, at the time, people were freaking out about Digital Currency Group and Genesis, and that, GBTC was going to collapse. And it was one of the best investment opportunities last fall when you could essentially snap up GBTC when it was trading at, almost 50 cents on the dollar, so to speak.
Yeah,
So
you,
it was trading.
you almost nailed the exact low there.
Yeah. Right around $8 on GBTC, today trading closer to 20. So it's been a fantastic trade. Of course, the improvement in Bitcoin price has also helped, but it's still today trading at, I believe, about a 20 to 25% discount to the value of its Bitcoin holdings. So even today, it's a bit of a flawed vehicle. But it also has potential upside if it does get converted to an ETF. So this is all to say that I do think it's a significant deal once the ETFs do get approved. And I think it opens up so much more of the market for individual investors out there.
I think the other positive for a spot ETF would be lower costs, right? Because
Exactly.
the cost of GBTC are way too high. And if you
Yep.
got an ETF at 50 basis points or less, I think that would just be huge. That would be really helpful for people.
Yeah, absolutely. I mean, GBTC deserves some blame here because, they charge a 2% fee at 2% of market value, or I'm sorry, 2% of the value of NAV, which means when it trades at a discount, it's actually a higher than 2% fee. So it was around effectively like a 4% annual fee last fall, which is absurd for something that's just passively holding one asset, right?
Yeah.
Even 2%, if it was trading right at NAV, a 2% annual management fee to just sit there and hold Bitcoin is a little ridiculous. So I think you're right. I think another big benefit will be that the fees will get compressed and competition will compete those down.
Yeah. Well, the market seems to think that this is a pretty bullish situation. As we saw yesterday, GBTC had one of the largest volume trading days since way deep into 2022, got us back above the moving average. So the price structure on GBTC's chart is absolutely still bullish. If we look at either the Bitcoin futures or even the spot Bitcoin price, it's really at a major inflection zone. So even now on that bullish news, we're still, as of right now, and this could change like in the next hour, but we're still not out of the bear market potential. This 28K zone is a massive area. We've got all three moving averages, the 100 period, the 50 period, and the 200 period moving average that are acting as resistance. Also, the trend line from really the low of the year and then the prior two pullback touches has now gone from support to resistance, and 28K is just a horizontal turn from support into resistance. So what I tweeted yesterday, let me see if I can find this. I said, all eyes on this massive resistance level at 28,500. It's basically the biggest area. And if we break above it, I think we're going to see the bull trend accelerate through the end of the year and through the next halving. So next spring. But if this holds a lower high, I think we're going to retest basically the low 20,000s. So it's one of those moments where you don't have to predict what's going to happen, but you can just pay attention and watch how price action actually reacts here. And if price gets above this, I think that's going to create what I call a pop stop run. So any shorts are going to get squeezed and liquidated. There was already some big liquidations yesterday on that pop to the upside. But I think, anybody that is short from the past several months here is looking at this 28 to 29K zone as a potential stop area. And if it starts to rip up above that, I would look for a really quick move. We call those like stop clearing moves, where it's kind of like a waterfall of buying because a few things happen. Number one, anybody that's short has buy stop market orders that trigger. And then you see that action, and it's kind of like buying begets more buying. Then you have breakout traders that start to participate. And then anybody that was potentially going to sell and had orders on the ask side of the order book, they pull those. So the sell side of the order book thins out, which makes it even easier for price to go up. So that's what I think could happen. But again, there's no guarantee. We just have to kind of keep our eye around this area and let price action be a guide.
Well
What do you
put,
guys?
well said.
Thank you. So the other thing I'll say is like, yes, yesterday we had the GBTC news, which was kind of a bullish signal for Bitcoin's price. But if you look at also what stock indices did yesterday, it was a really big up day for them as well, up over 1% or 2%. And that was also another kind of compounding factor for Bitcoin to go up. And if you look at the S&P 500, I mean, this was like just a beautiful textbook 38% retracement, bounce off of the 100-period moving average. Same with the Russell. The NASDAQ still kind of way overbought here, but looking strong as hell. Nikki, I saw something you tweeted yesterday. I think you were saying like FinTwit was mad that price actually went up. What happened there?
Yeah, everybody was tweeting like so angry that the stock market is basically moving higher on bad data. We got some data around jobs data and quits basically that showed some softening in the labor market, which is what the Fed has been wanting to see, and what people that are worried about reinflation probably want to see. They want to see wages cool down. And so the stock market essentially, it's kind of hard to parse out if it was ripping on just that data or if it was ripping on that data plus the Bitcoin data too, and essentially just risk assets were ripping. So it's kind of hard to tell, but I'm surprised by the strength. There's a head and shoulders setting up technically on the S&P 500 that's kind of being invalidated right now, I guess, so to speak, with that right shoulder. If we break above, that could kind of mess that up, or it is messing it up. So I think people are mad because bad data should be putting
Bad
pressure,
news is good
selling
news
pressure
kind of thing.
should be being put on this market, and everyone's up in arms about interest rates and just everything, and it's not panning out the way people think. That's how it's going.
We
And
wrote about that in the Daily Doe too. I believe two weeks or so ago, and we had the headline of the brief was basically that when bad news is good news, and to kind of put some more detail behind that point, Nikki, one reason for stocks rallying is that yields have pulled back. We were worried about the 10-year and the 30-year yields because they had been rising a lot in recent months. And they pulled back just this past week by 20 to 25 basis points, which gives some relief there on the longer end of the yield curve and typically helps stocks when yields pull back. And so the reason the yields pulled back is because of this slightly weaker than expected jobs data. Now we're going to get another big unemployment report for the month of August that comes out on Friday. So that will maybe confirm or not confirm what we've seen in JOLTS. But the Fed wants this. Like you said, the Fed wants the jobs market to cool a little bit, wage inflation to cool a little bit. And stocks, if we can sort of, find that middle ground between, the recession not falling off of a cliff, but not being too strong to force the Fed's hand to keep raising rates, then that's kind of that Goldilocks scenario for the stock market that most people thought, and myself included probably a few months ago, thought couldn't happen, but it's happening, at least to some degree. Now, it's still possible by the end of the year, early next year, things could roll over in a worse way. But, stocks are seeing the current situation and the current mixed data as a good sign that, we're kind of in this place, this softer landing place, so to speak.
Well said. So also, Nick, I think you threw this chart in looking at the revised GDP data. What do you guys want to talk about here?
Yeah, basically, the GDP data, they come out with updated numbers as we go. And there's going to be, I think, two more revisions from here, I think. And basically, it's just came in a little bit lower than what it was originally reported as. So, but still healthy. we're still not seeing negative GDP. And that's kind of what we look for in a recession, is negative GDP growth. And we're not there yet. So we'll have to see what happens.
Yeah.
We have forecasts for GDP, going higher and higher. So I don't really know. We'll probably land somewhere in the middle, as I like to say a lot.
Yep.
We've also got a really busy week for macro, right? We've got personal income and spending reports tomorrow, China manufacturing data, August unemployment numbers out on Friday, U.S. manufacturing numbers also out on Friday. So pretty big week. And, it's almost like price is kind of front running this data in a way, is what it seems like.
Definitely.
Yeah, it's interesting because if you look at the price action, it's really hard to get bearish. It's just one of these times that's really difficult to figure out direction from here. But it's in terms of valuation, we're kind of still in that scenario where the stock market isn't cheap, but it's not super expensive either. So we're still stuck there, which is not a very great place to be if you have a lot of capital to deploy, right? If you have a lot of capital, you want a pullback, you want a correction and cheaper stocks. And I even want that. And it's kind of frustrating to watch price go higher when you have capital that you want to deploy. So sometimes if you go against the herd, it's like, well, everyone maybe wants a pullback because they have cash. We're probably not going to get it. So if you go against the grain here, but we'll see.
Let's talk about some weird stuff that's been happening in crypto, shall we? So
weird in crypto. Oh man, what a shocker.
No, nothing there. Was it last week or the week before that? We were talking about the friend.tech situation with, basically we're calling it social fi, right? Social finance, and you buy tokens and you get access to chat rooms. And we actually wrote about this in the Daily Doe and talked about some of the red flags that were around this. And I think even last week or the week before, we were talking about how, yeah, it's interesting to see these projects pop up, but be very, very careful because a lot of them get rugged and a lot of them just kind of implode. And the tokenomics were not actually set up to really favor long-term, sustainability in this project. And I think when you look at, just kind of like the pump and dump nature of a lot of these things, this is why it's really important for me whenever I'm evaluating a project to say things like, do we know who the team is? If it's anonymous, that's a big red flag. And then when you look at the tokenomics, or even if it's not tokenomics, but just economics of how the incentives are set up, is it set up in a way that financially rewards like long-term sticking around, which this did not, right? It very much favored early adopters, and it just, again, it's kind of like a cash grab for a way for people to get in, make a quick buck, and then kind of move on. And so it's disappointing to see stuff like this kind of come and go so quickly. I'd love to see something blow up this big and this quick and actually see it stick around for a while. I don't know, man. This is kind of like the downside, I think, of crypto is when you see a lot of these projects that seem really cool and seem like they could have long-term sustainability, and then they either get rugged or people just lose interest, or the financial incentives just really aren't aligned.
It'll be interesting to see what X does, because I think that what we could see is something like an existing platform like X that already has the built-in user base. If they can design some smarter system here utilizing crypto, and we've heard some whispers that they might do that, that might be, the platform that really is able to launch something into greater use, right? I mean, we still don't know the details of what that looks like, and it maybe is a next year event, but that potentially that could be where we see something succeed where things like friend.tech have failed, or presumably they fail.
Yep. And it's not completely dead yet, but it definitely has lost its momentum. But yeah, actually, as of yesterday, X/Twitter got a state license to be a currency transmitter. And so they're definitely moving closer to being able to integrate crypto into the platform. This is, I don't know, let's check on Doge's price. This is one of the things that, if Doge does break up above the 10-cent level on either rumors or confirmation that Musk is looking to integrate this, that could actually kick off another kind of boom and bust pattern. Now, as we know, Elon loves to pump things at the height of the market. And so prices are down well over 90% off of the all-time highs where he was pumping it on Saturday Night Live. So from a risk to reward standpoint, it's a lot better here. Is Doge going to be the crypto of X going forward? I don't know. I think it's a long shot, but if it breaks 10 cents and we get another bull run, I'm here for it, baby.
Let's be real. Would anybody be surprised if it becomes the crypto of Twitter or the crypto for X? Like, of course, Elon would choose Dogecoin.
Yeah,
That's
I mean,
right.
I think he loves to be like whatever the Mac Daddy of whatever he's in, and he knows he can't be that for Bitcoin. So why not just try to take over Doge?
Yeah,
He knows how to pull the strings of his fan base.
Yeah. There was another big lawsuit that happened this week. Actually, was it yesterday or the day before? Have you guys heard of impact theory? So Tom Bilyeu has a really big podcast called Impact Theory, and he launched an NFT where basically he was selling, he called them founders keys. And I'll just read part of the complaint here. Impact Theory encouraged potential investors to view the purchase of his founders keys as investments into the business, stating that investors would profit from their purchases if Impact Theory was successful in its efforts. Among other things, they basically compared themselves to being the next Disney. And so, look, I like Tom. I don't know him personally, but I like his content. He sounds like a decent dude. And I don't know, he put out a response to this, basically saying he's, I think an attorney probably wrote this, but he put out a tweet saying that they are happy that they came to a conclusion in this matter. And I mean, this is going to cost them millions of dollars, 6.1 million in discouragement. But this kind of sucks. And I think this just goes to show you, like, doesn't matter if you call it an ICO, an NFT, a token, DeFi, whatever, like if it fits the rules of a security, the SEC is, they're going after it really hardcore. And I don't know. I'm just kind of split. On one side, I can see how this is like just obvious and stupid why you don't do this. And I think there's going to be a lot more large influencers that have done similar shit that they haven't already been sued. It's coming soon. So I guess to our listeners and viewers, it's just, hey, watch out for stuff like this. Like if you see somebody that you like selling a token or selling a crypto and it sounds like a security and they're selling it as like a way to profit off of their efforts, odds are down the road, these things are probably going to be worthless, or maybe you can recoup your money in a lawsuit. I don't know, but just be careful.
Yep.
I mean, but based on what you read out, it did sound like a security, to be fair.
Yeah, of course. I mean, it's obvious, right? And I don't know if this is just if they didn't know better or what. I mean, Tom doesn't.
I think a lot of people don't know better, especially in the crypto space. It's been the wild, wild west, and people have been able to kind of get away with these things and skirting these definitions because the SEC's made everything so freaking vague, right?
Yeah.
This, though, maybe not so vague, if you're promising profit or promising some type of appreciation or something in return. For the purchase of the NFT. But
I mean, we've seen Gary Vee do something kind of similar with V Friends. Then you had BitBoy off selling his token, which, well, he got fired this week. I don't know if you guys saw that. He got fired from his own company, basically. We don't even have to go there. I don't care about that guy. But anybody that's doing that, just be careful. That's what I'm saying.
Well said.
Also, I saw one thing that was interesting. I follow this guy, the car dealership guy and he was interviewing a guy that does a lot of volume. He was talking about just the percentage of people that are coming in trying to buy new cars that have over $10,000 of negative equity. And
I'm,
just
I'm sorry, but we
spin into
called this
people.
we called this so long ago, did we
Yeah.
not? Like on it, we talked money from like 12 months ago plus.
Yep. That's why I
we
brought it up.
knew
Yep.
we knew this was going to happen.
It's like
Called it
people
out
are
multiple
buying these
times.
cars above MSRP. What are they going to do? They're going to end up screwed. They're upside down. So maybe we're going to see actually not just a pullback in car prices, but maybe even an implosion like that. How awesome would that be if cars actually got really cheap compared to where they are today?
Well, something's
Yeah.
got to give with these vehicles. I mean, it's insanity. Even like a Honda Civic is expensive.
Oh yeah.
Yeah. I was talking about this the other day with my brother. It's like every car company, a couple things have happened here. One, obviously the whole supply demand dynamics got really messed up during COVID. And so all the car companies screeched production to a halt at the onset of the pandemic, which was probably the right thing for them to do at the time. But then, of course, we know what happened when fiscal spending put money into everyone's pockets, and then people had money to spend on cars. And so there was a big imbalance between supply and demand. And we're still just catching up to the supply needed in the automotive market. At the same time, you also have this transition to EVs constricting supply in the automotive market. And on top of that, you have all these auto manufacturers that are trying to shift towards luxury vehicles and trying to shift towards higher price points because they want more margin. And they're all trying to shift towards like pre-buying cars online before they even build them. Again, these are all like rational things for an individual car maker to do. But when all of them are doing it, it means severely constricted supply, very high vehicle prices. And if I were an auto manufacturer, I would try to think a little differently. They're all trying to get rid of their low-end models. But if we do go into economic weakness, it's like the car manufacturers that are going to clean up are going to be the ones who can actually produce ICE or hybrid vehicles at low price points. And no one wants to do that. And it's crazy to me. And so there's all these, strange things that keep happening in the automotive market. And I think I think the automotive market is going to remain screwed up for years. But at some point they're going to have too many vehicles. And so that'll be an opportunity, but
Isn't it kind of like how the phone industry brought back like the simple flip phone? Like people that don't want smartphones and don't want to pay $1,000 for a phone, they brought back like the real old school OG phones. That's kind of
Yeah.
what they need to do with cars. Like, hey, maybe somebody doesn't need a backup camera and lane keeping assist and all of these features in their Toyota Corolla. And, all they need is just a simple vehicle.
Especially in pickup trucks. I mean, pickup trucks used to be really affordable, work machines for the blue collar worker. Now they're basically high-end luxury, like 6-figure cars.
Yeah.
And yeah, I mean, the F-150 is the most common car among millionaires. And those prices have started to reflect it.
And go ahead. You can go
I was
ahead.
just going to say, talking about a weird kind of auto situation, something that happened this week. Trav, you talked about the weird stock. Was it VinFast and Daily Doe yesterday? We got a review from the what do we call those? Newsletter series or whatever. He said, great explanation of the auto company and its stock price. That was a good read to start my day. Cheers. Trev, do you want to talk about briefly like what that was all about? I think this is a really cool lesson and it helps people just understand like these weird, unique situations in the stock market.
Yeah, VinFast is a super fascinating one, but not all that unique in the sense that we've seen a lot of these, what we call low float squeeze stocks that just all of a sudden out of nowhere go up to massive valuations. I mean, VinFast, it was going public. It's a Vietnamese automotive company that's trying to shift to building EVs, but they deliver less than 20,000 vehicles annually versus, Tesla at like 1+ million, Toyota at like almost 9 million of annual production. And so this is a startup, tiny auto manufacturer that's not even public yet, or I'm sorry, not even profitable yet, but it just went public via SPAC. And it, in a matter of weeks, went from a $10 price at the SPAC going public to over $90 or up to $90 at one point at peak. So it was up like 900% in a matter of weeks. And at the $90 share price mark, if you multiplied that price by all the outstanding shares, it had an effective market cap over 200 billion. And again, that compares to that would make it, I think, the 4th or 5th largest automotive company in the world. and they are basically not competitive at all. And so people were like, this doesn't make sense. This is irrational. But it is a mirage, and it is irrational, but it happens because when very few shares are offered publicly, then any amount of demand can push those share prices up to just obscene levels. And so what happened here was the chairman CEO owns like 99.7% of all the outstanding shares, and his shares are not, so his shares are not tradable. So you're only getting the 0.3% of shares that are actually tradable. It ends up being like 7 or 8 million shares out of 2.3 billion total shares. And traders essentially can push around this small amount of tradable shares that we call float to just ridiculous prices. So the prices don't really reflect reality. They make a fun trading vehicle for a few weeks, but ultimately these always end up in just a massive share price collapse. And this thing will probably trade well below the SPAC price at some point. It was down 44% yesterday. So the obvious thing would be, oh, well, why don't we just short it at $90, knowing it's going to be sub 10 soon enough, but there's no shares available to short. And it's extremely dangerous to short or buy put options on. So we kind of just stay out of most of these situations. Now, if you can spot them early enough on the long side, they could make great short-term trades, but they're hard to figure out beforehand. So we've seen a lot of these in terms of SPAC companies that have gone public in the last year or two, but they'll continue to happen, and they're interesting to watch. But ultimately, I wouldn't worry about what these valuations are and why they're the 5th largest auto manufacturer in the world, because that is not sustainable.
Their cars actually don't look that bad. I'm here on the website, like actually look pretty sweet and kind of expensive, starting at 83 grand.
There you go. We were just talking about high priced cars.
Yeah, man. So they're actually selling these in the US then, or is this mostly overseas, or do you know?
Yeah, they are trying to market them in the US, but I think mostly historically they've sold overseas. But this is a crowded market. There are a lot of EV manufacturers in China. There are obviously EVs being manufactured increasingly by domestic US companies and other automotive companies. So the market's going to get pretty crowded. But some of these businesses will probably end up being good ones, and some of them are just going to end up being disasters. And who wins out? It's hard to say.
Interesting. Hey, did you guys hear about Burger King getting sued?
I don't think I did, actually.
No, fill me in on this one. I didn't see
for false advertising. So, we've been talking a lot about inflation. Let's talk about shrinkflation. This is a lawsuit. I think these pictures were actually in the lawsuit.
I think this is hilarious. Finally, somebody says it.
Absolutely. For the longest time, Americans have enjoyed oversized meals. Maybe this is a good thing that, we're starting to get smaller portion sizes. But yeah, in the lawsuit, they're talking about like what they're advertising the Whopper to look like. See how the patty is like overflowing from the bun.
Yeah.
And here the bun is like this wimpy little, or the burger patty is like this wimpy little thing inside of the bun.
I know.
This happened to Taco Bell too, right? Taco Bell was recently sued for this.
Were they?
Well.
Oh my God. Yeah. If you read some of the comments, they're hilarious. The top comment was saying the actual real one in the photo looks better than anything I've ever been served. They need to use a smaller bun. Yeah. I mean, I think a lot of people are like in agreement with this. Honestly, I hope food places keep getting sued for this shit. What's advertised and what we get are disgustingly different. Yeah, I agree. I mean, I've never had a good looking meal from a fast food restaurant.
It never looks like the photos ever.
Yeah.
Oh man, I'm gonna send you this link for the Taco Bell one too, because it's also really good in terms of the image here.
Nice.
Or you can find it, but it's the Crunchwrap Supreme, and the picture has it full of just overflowing with meat and cheese and lettuce and sour cream, and then the actual photo is basically a tortilla with some lettuce spilling out.
Oh my God, that's amazing.
That's a visual that is very funny.
Yeah,
so true, so true. It really pisses me off, the chip bags. The chip bags like have to be the ultimate trolls.
50% less than the actual bag.
Yeah.
Yeah.
It's getting worse, I feel like, too.
It is.
Shrinkflation, man, it's real. I mean,
It's for real.
people are getting squeezed, and not just on the prices, but on the quantity of the stuff that they're
I
getting.
I think that I'm very fortunate that I'm I don't have to look at every single price tag in the grocery store like some people do, and I see that as a blessing, right? But I looked at the price tag of the Tostito chips, the chips you use with salsa, Tostitos.
Mhm.
$6, 5.99 for a bag of Tostitos. I was floored.
What did
I
it
was like,
used to be?
I mean, you could get a bag of Tostitos for a couple of bucks,
Wow.
like, and the price that is just insane to me. $6.
Yeah.
That used to be like a meal at McDonald's or a full meal at McDonald's or something like that. I don't know. Yeah, I'm just inflation complaining right now. The food stuff really gets me.
Oh
Yeah.
yeah.
Well, hopefully we start to see that come down here later in the year. One thing that's not looking like it's coming down, though, is what I have been saying, I think is the strongest chart in the markets right here, gold. Look at
Ooh,
gold's
yeah.
chart, guys. This is nuts. This is like a massive cup and handle. And I only look at like the weekly or the monthly chart on gold because it moves so slow. But yeah, this thing is absolutely holding up and looking very strong. And when you look at gold, let me see if I can find like gold to the Japanese yen. I don't know if I can find that here in trading view, but when you look at gold priced in other currencies, it's already at a new all-time high and like breaking out. And so I think it's only a matter of time for the dollar.
It's been really surprising too, because gold for a long time was trading inversely with real rates. So basically the interest rate that you're getting minus inflation, and real rates used to be like deeply negative. And so gold was going up in the time frame, because why wouldn't you own something like gold if you're not getting paid to sit in fixed income and bonds, and you're losing to inflation by being in bonds? But now, bonds are actually paying a rate of interest that's like higher than at least official inflation numbers. And so the real rate of interest is positive. It's flipped positive. And yet gold has not gone down. And that's surprising to me. So we've seen a decoupling of the gold price with its relationship to real interest rates. And so that's another thing that I think is really surprising about gold here, which maybe is telling us something. And for a while, I thought, well, maybe what it's telling us is that real rates are going to get compressed again. Or maybe it's just telling us that, yeah, gold buying from other countries and central banks is up so much that it's just decoupling from its typical relationships. So very interesting to see the strength in gold this year.
I
Yeah.
think people are just seeing the writing on the wall. Like you need to have a portion of your wealth in these verifiably scarce assets: Bitcoin, gold, property, potato chips, whoppers.
Well, there's a lot of fear around, de-dollarization too. Could that be fueling some of this buying pressure as people worried about the dollar
Mhm.
and
Yeah, but the
just
dollar's done just
purchasing
fine
power?
this year. Yeah,
Well,
I mean,
yeah, it has, but the doom and gloomers that worry about it and the bricks and the this and the that, right? Like I don't know if maybe they're upping their allocations or what, but it is strange to see.
yeah.
Yep. And here's where did it go? Here is the gold Japanese yen price breaking out to a new all-time high. This thing has just been on a rip the past few years. So
Wow.
yeah, this is basically like most charts, XAU, CAD. Let's look at Canadian. Look how this thing is about to break out as well. So,
Wow.
yep, I'm bullish on gold. I'm bullish on Bitcoin, still bullish on stonks. I mean, look, man, the charts are not telling us that this rally is over. The only thing that's unclear right now is if Bitcoin's going to be able to get above 28. But my expectation with the halving come up is until something changes, that trend is intact. And especially moving closer to the ETF, like, I don't know. I'm having a hard time not being bullish on Bitcoin.
Yeah, I
Yeah.
was really looking for that 4,200 test on the S&P, but it's looking like it's not going to happen. Maybe we'll see.
Yeah. We could have used a deeper correction, right?
It just needed to be a little bit deeper, just a little
Yeah.
deeper. I really am surprised at that, I have to say.
Mm.
Well, we'll keep an eye on it. Again, like you guys were pointing out, we've got a lot of macro data that's coming out over the next couple of weeks. We've had some squeezes in place. There's still the battle in crypto. What other big themes or trends or important things are you guys noticing out there that people should be thinking about or paying attention to?
Trav, you got anything?
Well, we've hit on a lot of it, but we are going into a seasonally more volatile time period. So September, October have been historically months where we could see an uptick in volatility and an uptick in or potential for a correction in stocks. And so we can't really see the catalyst for that right at this moment. But if things shift, maybe something happens in the banking system, or, the Fed goes too hard at the September meeting and raises rates unexpectedly, that could create the catalyst for that big snap or big pullback rather, and higher volatility in the September, October timeframe. So that's something that we just need to keep in the back of our minds. And we actually, to that point, we are having a free class tomorrow that we're putting on that I wanted to mention. I'm doing that. A lot of people have been asking about ways to hedge and also asking about short selling, things like that, given the fact that we were just in a market correction. So I put together some good material on that, and we're going to do a free masterclass tomorrow. So we'll link that up. But that's something that, I think is always important to have the knowledge behind. And so we're doing that for free for everybody who wants to join. Yeah, but other than that, we're out of earnings season for the most part, and it's going to be a lot of eyes on what happens at the Fed meeting in September. And of course, this macro data, as you mentioned, that we've got flowing in to kind of figure out, are we soft landing or could it get worse? And so I think that's what people will be focused on the next couple of weeks.
Yep, absolutely. I'm glad you brought up the masterclass. I almost forgot to mention that. And the title is How to Profit from Market Fear, Step-by-Step Guide to Finding the Best Trading and Investing Opportunities in Today's Markets. And Trav, I know you've been working really hard, and I think you've got 40 something slides that you're going to cover.
Yeah, we're going to dive deep into some of the stuff that we've done on the hedging side, kind of taking some of that knowledge from the hedge fund world and just helping people better understand things like short selling and futures and other ways too. We'll also talk about, some of the strategies on the cash and bond side for, especially in this environment, for just being able to have a little bit extra protection there in the portfolio and rounding things out nicely.
Yeah. Awesome. Well, I am personally looking forward to that. And yeah, we'll make sure if you guys get on that list, even if you're not able to make it Thursday at 7 p.m. Eastern time, as long as technology cooperates, we'll be able to send out a replay to you. So make sure to get on that list. We'll link it up in the description. And yeah, we'll see you guys there tomorrow. Nick, any final thoughts from you today?
No, I'm just lasered in on this price action on the S&P and Bitcoin. We're kind of at a pivotal moment where we're either going to see, a rollover and a lower high, or this thing's going to rip and really, really confuse everybody.
Awesome. Well, we'll keep our eye on the 28K zone on Bitcoin and see if we're going to get an acceleration of the bull market. Stay safe out there, guys. Go to wetalkmoney.com/community. Check out our wealth building community. Make sure you're subscribed to the YouTube channel. Leave us a review on your favorite podcast platform. It really helps out. And we'll see you guys next week.
Thanks. See
Cheers.
ya.